Here we have an upthrust study using the GBP futures on a 15-minute time frame. This is the pound. Contract 6B. Okay. What do we note? First thing we note at high, our original anchor point. Very high volume, narrow spread in half the spread of the previous bar with the same amount of volume. Therefore we know, and the close is off the highest closing mid bar. So we know this bar has an awful lot of selling. Selling is clearly present at this level for whatever reason. We noticed effort versus result. So with the same volume as the previous bar, we only net this much. Only selling can do this. We revisit at B here, which is, we would classify this as an upthrust. We do get some white space between, this is a 15-minute time frame, so that's about 8 hours, 9 hours worth of trading. This bar looks strong. Yet let me clean this up. So this bar looks strong. We close above. However, the first thing we note when we're closing above this area is volume. This is our anchor point volume. This volume is only 25%. So all odds favour that this bar is not a valid break. We don't have enough force to push through this area. And we know this is supply up here. Why? Because we get a good move down. Although volume depletes, we still move down. We're tracing deep into this up move here. So from this attempted break, there is no upside follow through. We round over and boom, we close under. And this being our upthrust. We come up, no demand, weak price action into our original anchor point where supply, lo and behold, we come back down again. And then we come down and let's just go to bar C. So C dips under these local bars, reverses to close, drives all the way up, breaking this level and this level of resistance before sellers come in and they close it back under. Now this is a strong bar. However, the close is off the highs, and we'd have to take note that sellers came in here and they came in here, which are both resistance levels, and they defended their area. They managed to, although this is a strong bar, they managed to push it back down under to close under resistance. So although strong, sellers are still in the market. Okay, then boom, this bar, what does this do? This is the open, so it pushes through this level, pushes through this level, pushes through this level to reverse and close weak deep into the previous bar. So we break 3 levels of resistance before reversing and closing weak. This we would classify as an upthrust, and we do so on fairly good volume. So that is a bar we can short on the close. However, there are a few further insights here. From here, when we come down, what do we note? Well, we have buying here, boom, instantly resolved with a weaker bar. We have good buying here, boom, instantly resolved. We have buying here, boom, instantly resolved with the weaker selling. So every time the market's trying to push up, it's met with a greater force of selling, and we continue on our downtrend. We continue selling after every attempt to buy. Now that's a subtlety, but very, very important to know. It tells us that sellers have the upper hand. Okay, and from here we rally. We get a good rally, although this bar looks a little climactic. But what happens? What happens after this? I mean, from this bar, it looks strong. We'd expect higher prices, but no. We round over and then boom, we fall up, closing under this bar. So it wipes out all of this bar's positivity. So again, the market is hinting towards weakness. If the market is strong, we would not have this kind of action. We'd have shallow, weak pullbacks, and then we'd continue north. Every time we display signs of strength or we get some decent buying with good spreads, closing firms, instantly resolve to the downside. Then what happens? This is amazing. What happens after this negativity here, after we wipe out all the buying from here? We rally with no demand. This is not overnight action. We rally with no demand. Then boom, these two bars here. This is a move. It's orchestrated. We can see that sellers have control of this market. Then it pushes up at C, and then the very bar reverses to close weak, which is our up thrust. So these bars, what do they achieve? They get rid of all the weak shorts. Savvy traders might be short from here and here. And as we come down, where would the natural place for stops to be? The swing highs here, stops would be. Here, stops would be. We push up. We don't challenge this. Okay, so when we come down here and here, when we come down to here, people would move their stops to here. This is natural. It's protecting their positions. Then we rally with no demand. Okay, we're looking good. We could read this behavior. Then boom, these two bars, they catch this stop, catch these stops, and catch these stops. Ergo, they're gaining contracts. It's stop hunting. Then we continue south very sharply. Isn't this fascinating? This is exactly what these two bars achieve. It's orchestrated. Also, look at this bar here. Our actual up thrust bar. What does it do? Well, it's testing our original anchor point here at A, where there was selling. So selling emerged here. We had kind of a fake break or a foul break here with no volume. We come back into this area, and what do we know? Good selling again. So therefore, sellers are defending this area and active once again in this area. For whatever reason, sellers find this area of value. And we know that for a fact. Look at the move we get down. Phenomenal. We get good ease of movement to the downside after all these stops have been caught. It makes people uneasy. They don't understand what's going on. They thought they had clean reads. Therefore, as we do come down, we can note we don't have huge high volume, but we don't need it. Why? Because we get ease of movement. That means there's no buying friction. And we know there's no buying. How? Well, look, there's no demand. This is all on the same day. We know there's no buying in this market, and every attempt to buy has been swamped by selling. We get a good move here. What happens? Instantly resolve, round over, close under. Again, sellers making themselves present. So this bar C with this high volume, we can think of it as an upside shakeout. There isn't a, unfortunately, in our methodology, in the way that we trade, there isn't an upside shakeout. There isn't a reverse use of a shakeout for it. I don't know why, but we will call it an upside shakeout because it does that. It shakes out to the upside. Whereas the up thrust bar just captures those last few contracts before reversing bang to close week, and we get ease of movement to the downside. Good. This is a 15-minute chart, and if we sell, we short on the close, and we come down here to these lows, we can get out on this bar, and there is 60 ticks for 30-45 minutes work. Very nice trade. And if you hold overnight, we continue selling. Very, very good trading. Of course, we don't know that we'll drop this fast. However, the signs of weakness are all in the background. And with the up thrust itself breaking 3 levels of resistance, testing our anchor point A, where we've previously seen selling with good volume, is a no-brainer. We must take this trade. Okay, we don't trade this up thrust blindly just because it's an up thrust. We take into consideration all of our previous analysis and try to understand what are these 2 bars doing. And we know what they're doing. As we said, they're stop hunting whilst testing for supply, where supply emerges and we have no demand. We can see every attempt to buy swamped by sellers, and this is how we trade. We build a story of weakness and we get a very good result. Very, very nice. Good. On to the next study.